Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 21st, 2017. So today we have quite a bit to cover, so I'll kind of be brief here. We have lots of stocks and stock funds to cover. We'll also look at bonds, and they could be printing a rejection type of candles. We'll go on to Forex universe and then to gold, which may be poised to challenge overhead resistance. Oil had a big drop for the week, and I think more is likely to come. Energy ETF actually continues to slide together with oil. And we'll look at natural gas and see if maybe it's printing a massive head and shoulders pattern. Alright, let's start with stocks. This is S&P 500 ETF SPY, total return. In other words, the dividends, the chart is adjusted for dividends. So basically more choppy sideways action this week. I thought we were gonna break out, we had a really good looking candlestick here on Thursday, but we did not get follow through on Friday. So, because if we did get a follow through, we would have broken out, above, maybe above April, maybe at least these candles, not maybe even this candle April highs here. But so far, this did not occur, so we're still sort of trading sideways. Market breadth for S&P 500, it's not really that bad. It's just a little bit of a bearish divergence here, and it's a very minor one so far. You can see advanced decline volume line made a lower low here in April versus a higher low here in February, while the index itself made a higher low. Whether or not this will play out and index will continue to correct remains to be seen. Here's S&P 500, slightly longer term time frame. This is about a year worth of data. Here, what I wanted to show is that I think the long term, it's still very much bullish, and the market breadth is still very much bullish. The readings are still quite high. So, for example, here is percentage of stocks above the 200-day exponential moving average, and currently we're at 77%. So that's I think it's very high reading, and it is consistent with a bull market. We are pulling back slightly in the Department of Bullish Percent Index. So we're currently at 70. There's a little bit of a normal kind of pullback, but we were at very high readings here in March at around almost 80%. So now, so far, I don't see anything abnormal. Here, even last November, we dropped as low as 50, and that was not even that worrying. I think I would start worrying if we dropped into like 30s. So here's weekly S&P 500, and notice that here in February we came all the way up to resistance pivot 1 here at 2400 basically, and we kind of got rejected there and we pulled back. So nothing abnormal about that. Investors and traders do take profits around resistance levels and buy around pivots and support. So this is normal behavior. Hopefully we will bottom out here and continue higher so that the uptrend continues. I mean, even right now, this is just a normal pullback within a bigger uptrend. But here what we have, this week's candle is the entire range of this week's candle is within the previous week's candle. So this is called an inside wick. So let's look at that a little bit closer. So here's what I mean by inside wick. You can see that previous week's candle here, it's a red candlestick, and this week's candlestick is a white candlestick. So you can see that this week's candlestick is within entire range of previous weeks. So this is called an inside wick, and you can think about it also as a triangle consolidation. Now, triangle consolidation in this case is a bullish continuation pattern because we are in an uptrend. So if we continue to consolidate, as in a triangular fashion, eventually a breakout above it should be a good signal, and we should see fresh highs. Obviously, this hasn't happened yet, and in fact, I put this blue box here over the past month and a half or so. You can see that the range is defined basically by mid-April highs here and late April lows. And I think a breakout above will most likely make fresh highs. But if we do break down below, we could see a retest of 2017 highs here, lows here rather. Maybe around 2250, 2240. But here what I want to show again is a clear triangle consolidation. We had two inside wicks, this week, and this week in the beginning of this year, and it resolved to the upside. You can see a breakout here in late January. So we'll see if this continues and if we get a similar breakout sometime soon. As far as the higher beta universe, QQQ here is doing just fine. We're within a half a percentage point or so from all-time highs. So it's pretty much the definition of an uptrend when we're making fresh highs. Advanced decline line is also hitting fresh highs for QQQ. So this is all good news for the stock market in general when the high beta universe is making fresh highs. Here's XLK technology, also fresh highs and advanced decline line, and also very close to the fresh all-time highs. This is also QQQ. You can see where we dropped a little bit as far as the readings of longer term indicators. Here's the bullish percent index for QQQ. We're slightly lower. We're still very high and consistently bullish readings here. Again, if bullish percent index drops to, like, let's say 30, then I start somewhat worrying. But for now, I don't see anything out of the ordinary. In fact, here is IWM, and it's been kind of chopping around. We had this attempt at a breakout that kind of failed, and we moved back, well, basically to the 2017 lows here from January. But now it looks like we have a little bit of a bullish divergence actually on the advanced decline lines, and this could be an indicator that we will eventually and relatively soon break out to fresh all-time highs for IWM. Here's finally NYA. This one is you cannot really trade it, so it's more for educational purposes, but you can clearly see a higher low here in April relative to February, January lows here, while the advanced decline line kind of made a lower low. So here we can see somewhat of a bearish divergence, this advanced decline volume line. So looks like the number of stocks are pushing higher, while the big stocks are, well, the volume is lacking, I guess is the word. But once again, we'll see if this actually is something to worry about, or if this is just a temporary artifact. As far as the longer term readings, I still think we're in a bull market. Bullish percent index is in the mid 60s, and percentage of stocks above the 200 is still in the 70s. Again, if we drop to like 30s, then we may need to reassess. But at this point, I don't think there is, even a whiff of a bear market. Here, what I wanted to point out is this is the Dow Jones Industrial Average, and this candle is somewhat indecisive, and also the gain for the week is relatively weak, so only less than half a percentage point. But if we look at transportation average IYT, this one put on a stellar performance this week and gained almost 3%. So transportation is more volatile, of course, but this is looking like we have bottomed out here for IYT, and I think we may continue higher from here. And maybe IYT, the transportation is actually a leading indicator, and then we'll see a push higher in the Dow Jones and the rest of the indices. Financials are a bit of a drag right now. I mean, they came up to multi-year highs, now basically corrected to the January lows. A little bit of a bearish divergences here in advanced decline lines. Again, we'll see if this proves to be a worrisome sign. Right now, we're still clearly in a bull market. Maybe if we get a support break, if we close below 200-day, maybe if we get to November lows, maybe if we get lower readings in the bullish percent index, then maybe we'll start worrying. But right now, this looks to me like bottoming action, if anything. And maybe we'll just bottom out here and just continue higher. Sometimes we have to keep our minds open to better outcomes, not worse outcomes. I mean, yeah, I'm sure there are all kinds of headlines out there, and people start worrying about Korea and whatnot. But what if nothing really happens, and in fact, we get a better than expected outcome? Here's that better than expected outcome. Here's XLY, and these are all-time highs just on Thursday. Very strong stocks in this ETF, and additionally, this is extremely economically sensitive. So, if consumer discretionary stocks like Amazon, Disney, McDonald's, those are stocks that people spend money on when they have the money to spend and they're feeling good about themselves. So if this is hitting all-time highs, then I think we can safely say that we're in a bull market, and any pullback should be viewed as a buying opportunities. And I keep saying this to my subscribers, same thing, over and over, basically, is that if you see a pullback, then we should be looking at it from a point of view of buying opportunities. I would not be shorting this chart anytime soon. XLP, consumer staples, also all-time highs. Yeah, they're a little bit defensive, but they're still stocks, and stocks correlate very highly to one another. So fresh all-time highs in consumer staples, all-time highs in consumer discretionary, very strong readings, I think. And I think the bull market most likely will continue for the foreseeable future. I don't see major issues just yet. Here's utilities, very close to all-time highs as well. We have a little bit of a bullish divergence here because advanced decline lines and advanced decline volume line already hit fresh all-time highs, but the index itself has not. We're pretty close. So overall, utilities may be showing that there's a little bit of a defensive posture, but again, stocks and utilities are stocks. They do correlate with one another quite highly, so I wouldn't necessarily worry about strength in utilities as a worrisome sign. Okay, let's continue to bonds, and here at junk bonds, this chart is adjusted for dividends. So with the adjustment, these are all-time highs, and we're pretty much there. Again, this week we're very close to all-time highs. This is pretty much tells the whole picture. Junk bonds correlate very highly to the general stock market, so strength in bonds, in junk bonds, is showing also a bullish posture for stock market. Here are junk bonds on the weekly time frame, also very close to all-time highs again this week. And notice this is correlation coefficient, which spends most of its time in the positive territory. So bonds and junk bonds and stocks correlate highly to one another. Here's TLT. This is the long dated treasuries. So here we had a relatively strong move actually of the March lows, and we broke out above previous highs here from 2017 highs and continued higher. So we're kind of getting close to the unfilled gap here. But I think more importantly, on the next chart I'll show you, we're getting very close, or we did get there. We got to the pivot point, which is a yearly pivot point here. Notice that we touched it exactly there. So if investors were buying down here, they're selling up here. So there is now quite a bit of resistance here, and resistance comes from previous lows here. And as I just said, we have this gap also very close. So additionally, there's 200-day moving average. So there's going to be a lot of resistance here, and we'll see if TLT manages to push through that resistance or if it rolls over. Right now it's sort of indecisive and maybe a little bit of a bearish rejection like candle. You can see a selling that occurred during the late part of the week here basically. AGG, this is aggregate bond fund, so you know it has all kinds of bonds in this fund. This support, rather this gap down here from November was closed this week, so that's good news for AGG. Here's a weekly AGG, and notice that we're pretty much now at the previous lows from September and November, and basically we're at the support break level. So that forms resistance. Notice here that pivot points don't always act as support or resistance. Right now we're nowhere near pivot point resistance, which is at 110 here above. Previous pivot point, we just kind of traded around it and we just sort of ignored it more or less. So pivot points don't always mark the top or the bottom. They're just kind of lines there to keep in mind. And finally, here is LQD. This is corporate bonds. The gap down from November was closed last week, and this week we continued higher. And although we did sell off by the end of the week, so this sell-off is kind of worrying, because you can see it more clearly on the weekly chart. You can see that this is a rejection-like candlestick that looks a little bit like a shooting star. So again, we will see if this actually means anything and it will roll over, or if we could continue higher and break to fresh highs. These are all-time highs, by the way. So this chart here, I think it's still bullish, and you know, one candle doesn't change the trend. We'll see if we continue higher next week or not. Again, notice that pivot points sometimes work out. Like for example, here you can see that support was found exactly at the pivot point on a throwback. So we had breakout, in 2016 April, pullback, found support exactly at the breakout level, surge and pullback, and we pulled back to the pivot point. So sometimes pivot points do act as useful lines in the sand, and sometimes they do not. So it's not always possible to tell in this business which will work each time. Right, let's continue to the Forex analysis. So here is US dollar in a daily time frame. So there is quite a bit of decent support here around 99 dollar 99 point area, and again we're sort of coming down to that area here, and it seems like we want a bottom here. At least we see Thursday we attempted to spike down, and then Friday we surged here with a very bullish looking candlestick. So on a daily time frame, this looks like we're attempting to bottom here. For the week, the dollar did lose about half a percentage point versus other currencies, but I still think that this here from 3 weeks ago, 4 weeks ago, looks very bullish here, bullish engulfing. That was confirmed. So I still think that this bullish engulfing pattern is going to play out, unless of course we break below the lows here, and we may break below the April lows, and we actually could, if we break below those lows, we could retest April lows, or the November lows, I'm sorry. But again, overall, I still think that this is a bullish chart, and longer term, I think we're going to go higher for the dollar. Having said that, euro did surge this week, almost a percentage point. I think that, although to me this is clearly bearish chart, so I mean these are multi-year lows here just in January of this year. So I think that we could come up here to 109 or so, and it's now there's a lot of resistance up here now. In fact, British pound, you know, if I was trading British pound, to me this would be already a good setup to go short. Now, a setup is just that, it's a setup. There's no trigger, in my opinion, just yet for to short British pound. It sometimes actually pays to zoom out to weekly, and it makes more sense here. So here's that what I think is what I think is a setup to go short. We're basically at previous broken broken support. We attempted to recapture that support here in December, and we failed again here in February or January of this year, and again failed. And now we're again trying to recapture that broken support. And we could succeed, but then there is again resistance up here at about 1344 or so. So in any case, right now I wouldn't short it, but you know, once we get a rolling over kind of action, I would seriously consider doing it. I don't normally trade currencies though. So anyways, British pound, I still think it's in a downtrend. It will take a lot of effort to reverse this. And here's US dollar versus Japanese yen. Now I kept saying that you know, if you listen to my videos, that we may be finally bottoming, we may be finally bottoming, we may be finally bottoming, and now maybe we're finally bottoming. Maybe this is a hammer right there. Maybe this is a weekly hammer candlestick. If this is indeed a hammer candlestick, then we could surge, and this could be like a fallen flag. And if this is indeed a fallen flag, then we could maybe move, so maybe like 9% or so, like that much. So we could re-challenge this highs here from 2015, if this is indeed a fallen flag. Okay, let's move on to gold. This is a gold on daily time frame. So last week we had a breakout here above previous resistance highs from February and March, and now looks like we moved higher, and basically we're holding this breakout, I think. So this is very good news for gold bulls, and I am also a gold bull, and let me show you why. So this is I've shown this chart in the past, and this is gold going back 6 years. So I have developed my gold breadth index, which is an indicator that looks for basically a confirmation or non-confirmation of a bull or bear market in gold, and I use market breadths from gold miners to help me decide that, and it has a decent success rate. So here's in 2012 we had an entry of gold into the bear market, so already this rally here in 2012 I would have shorted it already. And then we had multiple attempts at a go higher breakouts. Notice that we had breakout, but none of them really succeeded, except for this last one, which happened in 2016, sometime in April. This breakout here was confirmed by the gold breadth index, and now I think we are in a gold bull market. So now I only look at buying opportunities. I no longer look to short gold. And we have corrected in this index, and actually here in October of last year we hit 2, and I was really kind of worried that we are going to roll back into a bear market, but so far we haven't, and in fact we were able to pull out of this nosedive, and now we're at 3. So this is definitely good news, and hopefully we'll continue higher and continue higher and maybe even get to 4, hopefully sometime soon. So in any case, gold I think is in the bull market. Here you can see I put in those pivot points again, just for illustration, to show you. Sometimes they work, sometimes they're helpful. So here's what's happening. We basically bottomed out here at the previous yearly pivot, and then continued higher, kind of pulled back here, and again we held support exactly at the yearly pivot here. So sometimes those pivot points do come in handy, and we had this inside wick and then breakout out of the inside wick pattern. So right now it looks like we are potentially going to re-challenge the resistance here at previous rejection highs, which was in November. Additionally, notice that there is now this first resistance point from yearly pivots here. So very strong resistance here, I think, at 1338. But if dollar continues to be somewhat weak, maybe we'll get there. Maybe we'll even break out higher. It's possible. Here's GDX, Gold Miners ETF, on a daily time frame. Much more volatile than gold itself, obviously, but it's if you like volatility, then this is definitely the ETF to be in. So we were sort of rejected here at the 200-day moving average and pulled back to the 50-day moving average. So now we're kind of trading between the two major averages. Up here, this is a major resistance here at 2570, 2580. If we do pull out of this and continue higher, this is a major resistance point. I think it will correspond similarly to the this resistance here for gold. Market breadth is unremarkable. Ideally we should see a bullish divergence. So ideally we should see this high here from mid-April be above February high, but it is not. So If we had a bullish divergence, I would have much more faith in it, but it's still somewhat indecisive, I guess is the word. But I'm leaning more, bullish. So I'm trading this on a long side. I'm not shorting it right now. Here's gold miners on a weekly time, on a daily time frame again. So we got rejected, sort of around the resistance point 2, right here in mid-April, but I think it may be a little bit of overreaction here. I think we'll attempt to re-challenge the highs. I think the bigger resistance again is at 2570, 2580 for GDX. Down below here we have several more of my proprietary indicators. For gold, the important thing here is that we are short-term overbought, and we're basically working off overbought conditions. So we're somewhat still a little bit overbought on a short term, and you can see that ideally it's better to, for this particular indicator, if we're bullish, we want to be buying when this indicator turns red. Well, sometimes it turns red quite a bit before the bottom is found, obviously. But in general, you won't be buying when this indicator turns red, and not buying when the indicator is black. So basically, we need to work off this condition. But sometimes, bullish securities, they continue being overbought, even as everybody's thinking, oh, it's overbought, then shouldn't we short it? So I would not necessarily short a bullish security just because it's overbought. Any case, longer term, here's GDX on a weekly time frame. Clear resistance, in my opinion, here at 2580, 2570, which is just above. So it's possible we'll actually get there next week, and we'll see if the behavior of GDX up there is consistent with the resistance. Because if we continue higher, this could be like an inverse cup or something like this. So that's 34%. And we could move that much higher. We could actually take out the highs from August. Okay, let's continue to West Texas Intermediate. Light crude oil, this is a daily time frame, continuous contract. So I kept saying that basically I treat oil as bearish, and I don't want to buy it, I want to short it. So we had a long consolidation here, choppy consolidation here. By the way, sometimes it's not obvious, for example on daily time frame, and I don't even go intraday, but on intraday it's sometimes completely like an ungodly mess. But if it's something is not clear, zoom out. That's what I always say. If something is not clear on a zoomed in chart, like for example on daily time frame, then just zoom out. So let's look at that briefly before we go to daily chart. So this is a weekly chart of oil, and this is the sideways consolidation that I'm referring to. To me, this looks very bearish because we had, big plunge, rebound, continuation lower, slight rebound, continuation. I mean, these are multi-year lows here. And even though these are 52-week highs, I think this was accidental because this sideways consolidation went on for so long, and there's just a really long kind of rebound. So I still look at this chart as bearish, basically, even though we had a very big rebound. Technically, we had like a 100% rebound. So anyway, so this is the consolidation here I'm referring to from 2016 2017 that resolved to the downside here in March, and this was like a first bear attack bounced here and then big relief rally. I kept saying that this is resistance is going to reaffirm itself because there's a lot of things that happened in this area. There's a lot of resistance here because of there's a lot of trading that happened here. So we basically topped out. Notice that we are, this is average to range ATR. So our ATR is about $1.1 here, and we could measure where we topped out. So we topped out exactly about around one ATR below the previous highs. So that's quite normal or normal occurrence. So big plunge here. Where is it going? Maybe we'll do a little bit of a upsurge again, but I think the bigger direction is down. And again, I would not look for bottom. I would look for tops and short them. I would not attempt to find the bottom in this security because to me, again, this is bearish. Here's XLE Energy ETF. This one looked more hopeful because we had this what appeared to be a breakout in November above previous resistance and actually 52-week highs. But then we kind of just kept sliding and sliding and sliding. Got to the breakout level, surged, but then we broke it again, continued lower. So now we're definitely we have definitely broken this. This is a breakout failure, basically, in my opinion. So we had a breakout failure right there in March because we're now below the breakout, and now we had an attempt to recapture it here in April and another one right here last week, and we both failed exactly at the new resistance level, and now we're making fresh lows. So this is a fresh low for the move, not yet a 52-week low. Notice that market breadth is pushing lower. These are 52-week lows for advanced decline line, and these are multi-year lows for advanced decline volume line. Additionally, this is a bullish percent index. It is in a low in the mid 20s right now. So this is consistent with a bear market, in my opinion. Here's XLE on the weekly time frame, and I just plotted XLE in the upper part here and oil in the lower part here. And notice two taps here. First tap that occurred in 2015. Notice that XLE started sliding before oil started sliding. Oil traded sideways here for a few weeks, but energy already was sliding down. And the same thing happened here in 2017, 2016, 2017. Notice that XLE started sliding before oil started breaking down. Oil is trading sideways here in most of 2017 and now started with support breaks. But energy ETF just continued to slide lower. And here's, big parts of the XLE are, of course, ExxonMobil, XOM. These are 52-week lows right here, just this week. And CVX, also notice that it's sliding together with the energy ETF. So to summarize, I think oil is bearish. I think we may see fresh lows. And I think, I don't know, it's possible that oil is losing its relevance because there are just alternatives to oil, and additionally there's just so much of oil that we're no longer dependent on Middle Eastern production, and the United States can pretty much outproduce anybody in the world. Alright, let's look at natural gas. This is natural gas on a daily time frame, continuous contract. So super choppy, you can see, and now, okay, so looks like we surged, pulled back, surged higher, pulled back, surged higher. Now we're sort of stalling around previous high here, well, second to previous high here from October. So maybe this is like a head and shoulders pattern. If we come down here and then break that support around $2.50, we are going to certainly be back in a bear market for natural gas. For now, I look at it as a still bullish. Natural gas, to me, this still looks bullish because we had a breakout here above previous resistance last year in June, July, and this is a 52-week high. So now we have had a pullback, very deep pullback, and a surge. So maybe we're stalling, and see a second week already we're getting this red candlesticks, and exactly at around previous shoulder. So maybe this is head and shoulder. I don't know. It's too early to tell. Let me put on some pivot points, see if they tell any kind of story. Not really. Notice that we're above the pivot, and it's kind of not helpful at all. Alright, that's it for this week's recap. If you like what you're hearing, please do like this video, comment if you have any comments, and of course share this video with others who might benefit from it. Also, please stay tuned on how to find us on the internet. Thanks for watching, and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling, and which funds I'm looking at potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members, so that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.